to another episode of the Real Estate Vibe Show. I'm your host, Winky Lumba, and today I have a very special guest, my good friend, Aileen Prak. Aileen Prak is a real estate investor and the co-founder of Bonavest Capital. Her focus is on multifamily investing and syndications. She's on the path to creating time freedom for her family and two young children. Aileen also a co-host of the weekday podcast, How Did You Do It? Real Estate. Wow, let's talk about that first, Aileen. Welcome to my show.
Thank you so much for having me, Vinky.
Yeah, I'm super excited. So let's talk about your podcast. How did you do it? That's what everybody wonders, right?
Well, that's what happens when we were looking and trying to figure out what was the name for our title, and it just kind of came to us. Actually, Sayla was the one who came up with the title, because our whole big question is getting into this space. Like, how did they do it? Like, how did people build up their portfolios? How did they build up their relationships in this space? And so it just seemed like it was fitting for what we were looking to get from the guests.
Nice. I love that name. So you want to tell me a little bit about yourself first before we get started? What is your background and how did you get into real estate?
Sure. So I'm still a full-time W2 employee, still work my job. I'm also a mother of two little young ones. One is 3, and then the other one is 1 year old. And we got into real estate a couple of years ago, but we started off with single family homes. And really, before we got into too deep into it, we discovered multifamily syndications. And at that point, we loved the model. The scalability was there. The teamwork aspect was there. And we really liked how we were able to buy a business versus with single family, everything was just based on comparables. You're looking at, the market uptrends and downtrends, and in fact affected by what's going on in the market. With multifamily, you're able to control that a little bit because you're valuing based off of your net operating income. Mm-hmm. And so for us, it really fit what we were looking for as investors. We were looking for something that, we could scale there. We could, invest passively into it, be able to build our wealth on the back end while we are still spending time with our family, and looking to do other things as well. And so that's how we got started with multifamily.
So next question I'm going to ask you is related to this. At present, at this moment, how do you see yourself professionally as well as at the personal level?
So in the past, as you're getting started in real estate, it was always something that we were like, oh, we're not really real estate investors yet. We didn't really step into that identity. But eventually over time, we're like, yes, we actually are real estate. So we would always introduce ourselves like, oh, we would be, we're full-time W2 workers. I work in the finance industry, in aerospace. And then I would always introduce myself as that first. But then now I look at myself as a real estate investor, and that's what I step into. It's like, I am a real estate investor. I do multifamily. I help other people invest passively within real estate investing as well, help to share and educate other people. And the one thing that I was surprised about myself too, getting into this space, was I never would have thought I would identify myself as a podcast host. And that is something that has really surprised myself, but I'm really glad that we were able to, start the podcast, help to educate other people, and bring on wonderful guests like yourself on mine as well.
Thank you. So when you change your status to the real estate investor and a podcast host, how did the things change for you in your arena? Did something change all of a sudden, going from your financial job or W2 job to real estate investors? The status change, right? So how people look at you now?
Yes, it's not only the status change, but then the mindset shift too, because, working as an employee is fantastic. We've been able to get to where we are because of that vehicle. However, when we just also identify as real estate investors, something bigger, we're looking at a bigger picture as well. We're more than just an employee. We're more than just like a finance worker. We help other people. We build relationships. And so when you actually step into that role, you accept it, you embrace it. It really shifts your mindset and opens you up to a lot of bigger, better things out there there too, because, there's so much more than just limited to just a traditional path of just working your job. You can become a much there's so many opportunities out there. You open yourself up to so many different things just by stepping into that and opening yourself to opportunities out there and identifying yourself as something more than just your job.
You already mentioned that you transitioned into real estate because you were looking some time freedom or financial freedom. And then you landed on the multifamily. You really like that asset class. You started exploring that option. So what I wanted to ask you is, how did you start in multifamily? What was the first deal like? And let's go through that trajectory up till now.
Yes. So I'm still working a full-time W-2 job as well as doing real estate on real estate as well. So for the first job or the first multifamily deal that we did, we had invested passively in the space. We wanted to educate ourselves first. We wanted to partner with an experienced sponsor that we knew, liked, and trust, and then really understand and get our feet wet before we jumped into anything else. Because when we've discovered the vehicle, it was something very new to us, something that we had never been exposed to in the past. So we really wanted to try it out. And the best way to do it was to partner with somebody and passively invest first, at least on our end. That's the path that we took.
Nice. So from passive to active, how long did it take to become an active investor from passive?
I would say it took us about from the time when we invested passively into our first deal until we got into our first active role was probably about a year and a half, a little over a year and a half, was when we got into our first general partnership.
So how was the experience like being a passive investor? Did you feel like this is something that you wanted to do and invest with more syndicators out there?
Yes, because my belief is that you work actively so you can invest passively. And with those two vehicles, you're able to build up your wealth so much faster. And so for us, our end goal is always to, is all about choice. We want to be able to create financial independence for ourselves so that we're able to spend our time where we want to spend our time. We have that choice, that option. We get to do what we get to do, not that we have to do it. And so by investing passively, we're making sure that our money is working really hard for us and that we're generating income on that back end. At the same time, we're funneling active income both through our W-2 jobs and then also as some partnerships on the general partner side as well. So we're funneling all of that so that we can take that and then invest it passively. So we're making our money work as hard for us as we can, especially right now when we have that energy, when we have that drive, we're young, we're energetic, we're passionate about what we do. And so taking all of that and just fueling it into this time, this moment right now, so that we can see a better future. We can see, a vision for ourselves and for our families and what we want to design our life to look like. That's what we're working to right now.
Wow, I love that mindset. Working actively and investing passively, making your money work for you. So let me ask you that. So how did you get into the GP role? How did you negotiate that with a syndicator?
So it was always about trying to add value and wanting to learn as much as possible. We always came from a place where we wanted to learn and just soak in and be like a sponge and just take from the people who are more experienced in our space and just absorb as much knowledge as we can from everybody, because there's so many smart, incredible people in this, in multifamily in the real estate space, and wanting to just, put yourself out there and try to add value and learn as much as you can. So what we did was we were talking to many, many, many different people, and especially through the podcasting, we were able to network significantly because we were doing 5 days a week. So we were meeting so many different people and then just really listening to where their needs are and what were they looking for and how could we help them. And so through some of those conversations, we built a lot of great relationships. And then, we just determined like, hey, we can add value to you in this aspect, or let us learn from you. And then we can partner together and we can do whatever you want to hand over to us. And so we were just hustling and bustling and just trying to add value where we could. And so that's kind of how we started, is just keeping our eyes and ears open and then just listening to where the needs are of other people and building up a really strong relationship so that we could, down the road have a potential partnership or work together on a deal together.
Oh, I think that's the best strategy, finding the gaps and trying to figure out how to mitigate those gaps. So now you're building up your resume. So what is up on the trajectory now? So how you want it to scale from here?
So we've been continuously partnering and building up relationships with other sponsors in the space. At the same time, looking for our own deals, building up the relationships with people in our core markets, building up a strong team in those areas. And at the same time, continuing to invest passively, like I said, so that we can continue to build up our wealth. And then, with those different aspects going on for us, we can see the fruits of our labor down the road. It will take some time because within this space, it takes time. And we're not going to see the results right away, but we know that right now we're planting the seeds everywhere we can. And then we're doing it strategically. We're doing it diligently. We don't need to be the fastest one in the space. We need to be the most cautious. We need to be very patient, looking for the opportunities. And I think that's where it really is just keeping your eyes open to the opportunities out there.
Great. So how do you find these opportunities? I assume you maybe first deal and now to you plugging in the deal as a capital raiser, right? So as a capital raiser, so what other task or what other roles can you play? Can you identify yourself, or how do you kind of negotiate with the sponsor that you can participate in that deal more than just a capital raiser?
So it's going back to listening and actively listening to what their needs are. And so I've been fortunate enough that me and my husband, we do this together. So we're able to leverage off of our strengths and weaknesses at the same time. So what we've done is, through conversations and relationships, we're able to, determine, like, one of the groups that we worked with, they had a lot of experience in this space. However, they didn't have the time needed to underwrite. And so what we did was we talked to them and said, hey, if you had some deals, we could help you underwrite those deals. If you don't have the time to do it, you can send it our way. We can underwrite them and we'll send it back, give you our feedback. And through that, we started to build a really, really strong relationship where now we're underwriting almost all the deals for them. And then, connecting and then building up that trust and that relationship so that we can continue to do more deals together down the road. And then at the same time, like from the other groups that we worked with as well, it's how can I add value to you, leverage off of our maybe network that we've built up. How can we bring some people to help with the space, to bridge some of the gaps, maybe be participating in some other types of roles as well. So we're bringing in our network and then our time as well. And then our experience that we've seen through networking with other people, and the education that we brought as well.
Yeah, but how the sponsors are taking it? I mean, are they okay with you coming as an, asset manager or like part of the asset management team, and you not having the background, or you just having the strictly corporate background?
So it's never a quick relationship that we say, hey, I'm going to give you this asset management side of things, or hey, I'm going to give you this underwriting, the acquisition portion of it. It's never like a quick turnaround like that. It's building up that relationship and showing your value and your worth to the team for them to be able to look at you and say, like, hey, let's see how this works first. Like, here's a couple of deals to underwrite. Look at these. Tell me what you think, and then from there, building up that relationship, and eventually it's evolving over time so that you can do other things within the role as well, not just bringing in the capital, but you're participating and having these conversations up front and letting them know, like, this is what I'm looking for in the relationship. Is this something that, you'd be willing to look at, or you'd want to build up on this relationship? These are the certain things that I'd like to learn and I can bring to the table. And then it's just a slow build up from there. And then just really having that open conversation and letting them know exactly what you're looking for and how you can bring value and how you can add value to them. And at the same time, what are some of the things that you're looking for in the relationship as well? Because it's two ways.
That's true. And then plus you have to prove yourself too, whatever you're promising them, whatever values or strengths that you're bringing on the table is very important for the sponsor because you're wedding the sponsor, they're wedding you too, that
Yep.
fulfilling your promises, which is good. So how do you manage all this, chaos in your life, the family, the kids, the W-2 job, and now you have taken on so much on the real estate side and podcasts. How do you manage your time through all these things?
It's not easy. It's not easy, but there's some things that we have to shift it in our life. One big thing was our mindset because in the past it's like, well, I don't have enough time to do all this. I'm going to get overly stressed out, but I've shifted our mind to open the possibility of what kind of lifestyle we want. So that's really what's driving us, is the ability to spend more time with our family or spend more time with our kids. We're learning so much. We're growing, not just professionally, but personally as well. And so seeing that growth, and then seeing what traction that we've been making so far and the people that we've been building up, it has given us a lot of energy to be focusing on these different tasks at hand. So we think about, hey, we get to work on these things, not we have to work on them. So we're really enjoying what we're doing. And that, I think that's where the biggest difference is that you have to enjoy what you're doing, to be able to continue on and to have this energy, this drive to move forward, because it's a lot of work. It's a lot of time that's committed to being successful in this area and doing it right. And so it's focusing and really leveraging the help that you can get also. I mean, we couldn't have done this without our family's help. We have the little kids as well. And so they've been helping here and there as we needed to spend some time on certain things where they've been able to support us along the way. And I think that that's so important, is having the support of your family and the network that you have around us, to be able to do this, because you cannot do it alone. It's very difficult. And so we've learned that by doing this together as a team, and then focusing our energies on our strengths, it has helped us and leveraged us to be able to get to where we are today.
Oh, so where do you see yourself in next 5 to 10 years?
5 to 10 years, it's the whole entire journey. It's all about choice. So it's getting to that point where we have that freedom of choice, where we can, where we have that financial independence, where we can decide whether or not we want to continue to work, we want to transition, or, continue working in our full-time W-2 jobs. But it's just ultimately having that choice. And that's where we see ourselves, is, opening up ourselves to that possibility, those opportunities out there, so that down those road, 5, 10 years down the road, we have that choice. So we're always just looking to continue to grow, to continue to build up our, our education base, our knowledge, our relationships, and then also be able to spend the time with our children, to be able to spend the time with our family, where that's what we've set out to do. And so having that choice and that freedom to do it is what we're working towards.
So you taking your own deals down, that's part of your goal as well. You're
Yes.
doing end-to-end deals,
Yes.
inception to completion.
Yes, that's right.
That's the plan to do it as well going forward. Are you working around building a team for yourself? Because so far
Yes.
you're partnering with others, right? Co-shipping with others. So are you
Mhm.
working to set up your own team? So what
Yes.
exactly are you doing? What kind of research or what kind of tools or techniques that you're using to build your team now?
So building up the team is all through relationship building. So it's continuously having, reaching out and building up the teams of like property managers, brokers, lenders, all through these relationships that we've been building up with other people, the co-sponsors in the area. We've been building up the relationship side with other potential team members out there. So we're solidifying those relationships. So as we come across our own deals, we have the network, the ability to close on it, to be able to perform. We have the knowledge base to run it successfully, because we're able to lean on and leverage our partners as well. And so it's not just about like, hey, we want to take this down on our own. Yes, we want to take it down, but we want to do it on a team. We want to do it with the strongest team that we've built, and then the people that we trust and that we like. And so right now, that's what we're doing. We're just planting seeds everywhere. We're building and solidifying relationships across across the board with all different players, so that when that time comes, we're going to be successful in it. And then we'll be able to pull in team members as we need it because we've already lined everybody up.
You said strong team. So what do you see in a strong team? What kind of strengths you're looking for in a strong team?
So first and foremost, we look at the synergies there and their role, their values, and does it align with ours? Because there are fantastic people in this space, but sometimes maybe the values are a little bit different. Their goals might be a little bit different than ours. So what we want to look for is those synergies there, that to make sure that they align with us, because it's a long-term relationship once you get into these deals with each other. So you want to make sure that those are like the core fundamentals first before looking for a strong team. And then is it, what their core values are, their ethics, how they approach things, and how they want to add value as well. And then also, work ethic is really important. The communication styles, because the communication, we realize in this space, everybody has a different way to communicate, but it's how are they communicating? And then is it aligning with how we want to communicate to the other people as well? And so it's just it's those types of attributes that we look for when we partner with other people. It's so easy to get into a partnership or jump on a deal. It's very, you can do that very quickly, right? But the hard part, the difficult part, is vetting it and really making sure that you're aligning yourself with the people you are working with, because in the end, you want it to be a successful relationship. You want to make sure that you're all aligned, you're all on the same page as much as you can before jumping on it, because it's so much more difficult to get out of a relationship than it is to get into one.
That's so true. You said it very well. And you're talking about the network the whole this time, that you build up this huge network around you. And then you're leveraging that too, because you're bringing that network to the sponsors in a way to chime into the other things what they're offering beside that capital raise. So I wanted to ask you, how did you build that network? What was the efforts there?
Yes, though it takes quite a long time, but I think the biggest way that we built up our network was through the podcast.
Mhm.
We've been able to meet so many fantastic people through the podcast, and different people like lenders, brokers, other syndicators in the space, to build up that network. And so that's I would think that that's the biggest way that we've been building it up. The other way is going to conferences and meeting people like in person, which is what we're doing now. It's a very different relationship once you actually meet
Right.
them in person than over Zoom. And so those are the two biggest ways that we've been able to build out our network.
Great. So in this network, what tools or techniques you've been using to find the investors, like the real passive investors who would like to invest with you?
So it's a slow and steady race with this side of things. And so we've built out, we've gone onto other people's podcasts and it's just all been organically and through word of mouth, and people within our own network as well, who have heard about us, who like where we're coming from, our goals and our values, and if it aligns with them as well. Some of the people have heard us on other podcasts as well and have reached out to us, and we have a conversation with them, and then if our goals and our vision aligns with theirs, it's just keeping them in the loop and building up that relationship with them and seeing, does our deals help meet their needs? Will it help them get to where they want to go to? And if not, that's fine. There's so many other deals out there, but we just want to provide an opportunity for them to look at it. And if it works out for them, if it matches and meets their needs, fantastic. We would love to be part of that. If not, there's so many deals out there. It's just wanting to add value and just providing these opportunities for people to know what is out there.
That's true. You said it very well. Adding value to, both ways, even to the deal sponsors or to the investors. That's the most important thing. So do you use any kind of a CRM system or anything to manage your investor database?
Yes, right now it's Active Campaign.
So it's working for you. So you just do the email drip and all that to keep
Mhm.
them appraised on all the activities what's going on.
Yes, that's primarily the way, yes, to build it up.
So can you share with me what is your typical day like? Because since you're working 8 hours a day at W2, so how you're managing I asked you this before, so I'm going to ask you again. How do you manage your podcast and how you're managing this investor database, because you have to regularly send them the updates. to keep kind of in sync with them or nurture those
Mhm.
relationships?
Yes. So I'll start off with the podcasting side. So every other Fridays I get the days off. And so those Fridays, I will batch record my interviews. So I will do anywhere between 8 to 11 interviews on those Fridays, back to back to back. So I have recordings for the next 1 or 2 weeks. And I like to keep a bank of interviews, so that I'm not hustling and scrambling to get interviews for my podcast release. So I'll usually have about 30 episodes ahead of time pre-recorded. So they'll just keep going out in case something happens and I'm not able to, do an interview. And so that has been a really big game changer that has really helped me to, schedule my time and focus on just, I know every other Fridays is my podcasting days. Sometimes, I have to, in the mornings too, sometimes we'll have to accommodate people for podcast interviews. So I'll do it early in the mornings before work, before the kids wake up, to catch them on the East Coast time,
Mhm.
or I'll schedule it after work, like, 5 o'clock if they need to. I'll do that as well. And the same thing with investor calls. I'll do the same thing. I'll do, early mornings or late afternoons, evenings. We also talk on the weekends as well. So we have to squeeze all the little time that we have and try to be as efficient with our time as possible, all the while trying to keep in mind that, I don't want to miss out time with my children, with my family, because that's the most important to me, is being able to be there for my family and my kids. And so, me and my husband, we have to tag team also. That's the only way we can do it,
That's
is
true.
if I have to take a call, my husband will watch the kids. If he has to take a call or he needs to focus on this underwriting, I'll watch the kids, and so I think that has been one of the biggest help, is, being able to do it together as a couple and leverage off of each other's um, strengths and weaknesses and time too.
Yeah, that's good. I think that's a good strategy because that's what you're doing everything, right? Whatever you're trying to accomplish
Mhm.
financially, you're doing it for them. So you have to spend time with them, which is awesome. So share one golden nugget with my audience.
I would say don't ever be in a rush to jump on a deal, especially if you're first starting out or you're not seeing the traction that you're expecting to see, because it's so easy to get on something and jump into that, whether it be as a limited partner or as a general partnership, but you're going to be paying for it down the road if that's the case. So you want to make sure you do your due diligence. There's always going to be another deal around the corner. And so for us, it's, we don't care to be the fastest in the space, but we want to be the most cautious. The hard thing is, I think Warren Buffett said it really great, like, you never want to lose money, right? The first
Right.
rule is never to lose money.
Mhm.
So if we can mitigate our risks, if we can take caution and enter these deals slowly, diligently, then we can mitigate as much of the risk as possible. Of course, with all investments, there's always going to be risks out there, but what are some of the ways that we can mitigate them? And so I would just say, do your due diligence, take your time, don't be in a rush.
I'm going to ask you a follow-up question, even though it was the last question for me.
Of course.
I said a very good thing, be cautious. So for being cautious, you got to do the due diligence. So what are some of the, top priority items in your due diligence that one should be doing or taking care of before entering into any deal, whether it's a passive or active?
So first is really vetting the sponsors, and it's all about that relationship and getting to know and understand where their core values are. Whether or not you are a passive investor or you're going to be a general partners, but you want to really vet your partners in this space and who you are looking to work with. That is the first and foremost thing that we always look at. And then afterwards, you can look at the deal itself and then see whether or not it meets your requirements. For us, it's like I mentioned, it's hedging against the risk. And how do we hedge against risks? We make sure that reserves are in place if things are, if things go south. How do we hedge against, potential
Mhm.
potential bumps down the road?
Right.
We put enough reserves in place, make sure that our plans are not overly aggressive, but they are, they will get us to where we're able to get to, but with some conservatism in them as well. And, the business plan, whether or not it's feasible, are they overly aggressive in the market? Can they do those value add turns, you know, 5-10 units in a month. I don't know, so just doing your due diligence and checking to see whether or not the business plan is actually feasible. And then reserves, if there's ample reserves in case of anything that happens, you're covered in that aspect as well.
That's true. Yes, whatever is aligned with your goals. And then you're not getting that queasy feeling in your stomach when you're going on a deal.
That's a bad sign. That would be a bad sign.
That's the best thing. So this brings us to our rapid fire round. I'm going to ask you 5 questions. You have to answer in 1 word or 1 sentence only. Are you ready?
Yes.
Okay. So who was the most influential person in your life?
Can I say 2 people?
Of course you can.
So I would say, I guess my parents and my husband as well. My parents and my husband. I don't know if you want me to elaborate.
Yeah, sure. Go ahead.
Well, my parents are the ones who set up the foundation for us to be able to really value education and to understand money the way we do. They took us, a certain place, and then we were able to leverage from that and then learn further and farther. And then, of course, my husband, because I wouldn't be able to get to where we are today without his support and then his, knowledge and his strength as well.
Nice. What is the best book you ever read or recommend?
If you're looking for real estate specific, I would say Joe Fairless's best ever book. That one there gives a really good guideline about step-by-steps about how to evaluate apartment syndications.
What is your biggest passion?
My kids, my children, all the way.
Nice. In 1 word, what does life mean to you?
I would say family. Family is what I would say.
Yeah, I agree with that. What is your favorite food?
My favorite food. I don't know. I love noodles. Noodles. I love noodles.
I like noodles too, actually. How can people reach out to you?
They can always visit our website, bonavestcapital.com, or they can always email me, Aileen@bonavestcapital.com.
Thank you, Aileen. I really enjoyed our conversation today.
Awesome. Thank you so much, Vinky.